In this video, we're going to be looking at what seller concessions are, what are some of the challenges that you may face when negotiating seller concessions, what are the limits, and how you as a home buyer can leverage this strategy in multiple scenarios to buy your dream home. As the name suggests, seller concessions or credits are contributions from the seller of a property to the buyer as an incentive to pay for some of the buyer's out-of-pocket closing costs. This is a great tool to help make buying a home more affordable, especially for first-time home buyers and for those who have limited cash saved up. Now, this falls within the category of interested party contributions. Interested parties to a transaction include, but are not limited to, the property seller, the builder or developer, the real estate agent or broker, or an affiliate who may benefit from the sale of the property. The most common interested party contribution is the seller concession. If you look at what it takes to buy a home, even with all the low to no down payment loan options out there, home buyers typically have to bring some cash to the table to cover closing costs. This usually includes your title insurance, your recording fees, loan origination costs, prepaid taxes and insurance, among other costs, and can be anywhere from 3 to 6% of the purchase price, depending on a lot of variables. You may have some money saved up for a down payment, but it may not be enough to cover all the closing costs. So having the ability to offset some of these costs really helps make home buying more accessible. Another benefit is being able to use seller credits to buy down the interest rate, whether it's for a temporary or a permanent buy down. A lot of times this could make the difference for a buyer that may have a hard time qualifying for a specific price point, either because the interest rate is too high or just not having enough funds to close. Another scenario is where you're already under contract on a property, and after the home inspection you discover certain cosmetic issues that aren't lender required repairs, but you still want these to be addressed. However, you don't want to delay the closing in order to complete the repairs. And so instead of asking for a lower purchase price, you ask for seller concessions. Now, this leaves more money in your pocket, allowing you to take care of those issues the way you want to after closing on the home. So one of the challenges with seller concessions is that it can be harder to negotiate when competing with multiple buyers for a specific property. When demand is higher than supply, the seller has a lot more bargaining power, and so asking for seller concessions only weakens your offer, making it harder to get that contract. Now, one way around this would be to increase your competitive offer by the amount of concession that you're asking for. So for instance, let's say you want a home that's listed at $400,000, and there are two other bids that you're competing with, and your agent, after looking at the market, believes that to stand a good chance of winning, you have to offer at least $410,000. So what you could do is you could offer $420,000 and ask for $10,000 in seller concessions. Now, the only caveat with this is that the home has to appraise for that higher price. It has to appraise for $420,000 in order to make the deal work. But this is not just a great strategy for someone that doesn't have any money saved up. Let's say you have $110,000 saved up to buy a home, and you want to keep your down payment at 20% or higher in order to avoid mortgage insurance. So if the home that you want is $500,000, your down payment will be $100,000, and your closing costs at approximately 3% will be $15,000, which means you will be $5,000 short when it comes to closing. Now, if you lower the purchase price to $495,000, you're still going to be short $3,850. But instead, you could negotiate a purchase price of $500,000 with $5,000 in seller concessions and make the deal work. So this is a great strategy for a lot of different scenarios. Now, another challenge you may come across is that there are limits to the amount that you can get in seller concessions. And this varies depending on the type of loan and how much money you're going to put down. So for conventional loans, if your down payment is less than 10%, the seller can contribute up to 3% of the sale price or appraised value. If your down payment is 10% to 25%, the seller can contribute up to 6%. If your down payment is more than 25%, you can get up to 9% in seller concessions. Now, if you're buying an investment property, the seller's contribution is limited to 2% no matter what your down payment is. For VA loans, the seller can contribute up to 4%, and for FHA and USDA, the limit is 6%. So the bottom line is that this is a great tool and can be a win-win for both the home buyer and the seller in the right market. It's also important to have the right real estate agent that understands the nuances and can strategically negotiate this for you to win the house you love. So if you're thinking about buying a home and want to know how much you can qualify for, reach out to me and we can go over all the numbers and we can build a roadmap that's customized for your specific situation. If you haven't already, subscribe to this channel and hit that bell to be notified of other educational content. Also, like this video and share this with someone you know that might benefit from this information. Thanks for watching. Have a great day.